Let's start with another accounting standard for a quick revision, AS 19, accounting for leases. The points which should be discussing, there are many number of points. We will quickly wrap up as is possible. Definition, then accounting for finance lease, or I'll do this later. I'll just wait. Indicators to identify finance lease, accounting for finance lease, accounting for operating lease, sale and lease back. Of course, when I say accounting for finance lease, for lessor as well as lessee. Operating also lessor and lessee. We'll be talking with respect to each of them. Yeah. So let's start. Definition. What is a lease? Lease is an agreement wherein the lessor conveys to the lessee the right to use the asset for a fixed period of time against series of payment referred as lease rentals. Now, a big definition you think, but it's very simple. What is a lease? Lease is an agreement wherein, say, Mr. A conveys to the SC. What are you conveying to the Mr. B? Not an asset. You're not giving an asset. What you are giving them? You are giving them right to use the asset. So Mr. A gives right to use the asset to Mr. B for a fixed period of time. Some tenure is there, say 5 years, against which Mr. B has to pay what? Pay some payments which are referred as lease rentals. So ownership is not transferred, only possession or the control of the asset is getting transferred to Mr. B. There is a lease. This lease can be an operating lease or it can be a finance lease. What is operating lease? The standard says other than finance lease, all lease are referred as operating lease. Other than finance lease is referred as operating lease. So what is finance lease? Don't say other than operating lease. Here I have to define a lease which substantially transfers risk and reward incidental to the ownership of asset. So lease which transfers risk and reward incidental to the ownership of the asset is referred as finance lease. Now this becomes very difficult for us. Sir, whether risk is transferring, whether reward is transferring, what is happening? And when I'm talking about risk, I'm not talking about if it is broken, if it is stolen, the asset is stolen, who is responsible. That for, of course, insurance companies are there. I'm talking with respect to the risk that the asset will not be able to perform. The risk that the asset cannot be utilized properly. These are also the risk. Whether such risks are getting transferred or not, that is to be looked upon. And because of this, what does the standard say? The standard goes for this area. The standard goes for this area, that is indicators to identify lease. How would I come to know whether it is a finance lease or an operating lease? So the standard has given 5 parameters. If this 5 parameters, any one parameter is fulfilled, then it is finance lease. Indicators to identify finance lease. The first, at the end of lease term, the ownership of the asset will be transferred to the lessee. It's nothing but hire purchase. At the end of the lease term. So when the lease term will get over, the ownership will be transferred to the lessee, then it is nothing but a finance lease. At the end of the lease term, the ownership of the asset will be transferred to the lessee, then we say it is nothing but a finance lease. Second, the lessee has an option to purchase the asset at the end of lease term at a discounted price. Standard says at a price lower than its fair value, of course at discounted price. And it is certain that he is going to exercise the option. It's a big stuff. I'm just giving you a brief idea. In the first case, 100% the ownership will be transferred. In the second case, the lessee is given an option. Sir, if you want to buy, you can buy. And you can buy at what price? Some price which is less than the fair value. Discounted price means less than fair value. You can buy it. Third, the lease term covers majority of economic life of the asset. Now, there is no clear guidance with respect to what do you mean by majority, but if the lease term is 75% of economic life, then we say majority is covered. Majority don't think about 50% majority. I'm talking about 2/3 majority. Yeah. So if lease term is 75% of economic life, we say it is nothing but a finance lease. Economic life is 10 years. The lease term is 8 years. So we will say it is nothing but finance lease. Now whether the asset is going to go back or whatsoever it may happen, the accounting will be as per finance lease. Fourth, the minimum lease payment, MLP, substantially covers the fair value of the asset. The minimum lease payment substantially covers fair value means, one more point I just missed to write down. The present value, I'll just add up. The present value of minimum lease payment substantially covers the fair value of the asset. Substantially covers the fair value of the asset. It means PV of MLP should be at least 90% of fair value. If present value of MLP is 90% of fair value, then we say it is nothing but a finance lease, the present value of MLP. Now the question arises, what do you mean by MLP? What is MLP? So minimum lease payment, yeah, that is the full form. We are not asking full form here. What is MLP? From the standpoint of lessee, from the standpoint lessor. So what is minimum lease payment? So it is nothing but lease rentals, aggregate of lease rental, plus, I'll just write down short form, it is nothing but guaranteed residual value, guaranteed residual value by or on behalf of lessee. So two things, the first lease rental, second guaranteed residual value. The lessee is giving guarantee that at the end I will buy out this asset at this price. That is guarantee. Either it is given by the lessee or somebody on behalf of the lessee has given the guarantee. This is nothing but MLP for lessee. Now, what is MLP for lessor? It is nothing but lease rentals plus guaranteed residual value by or on behalf of lessee or guaranteed residual value by a third party. Of course, it is not same. Either GRV by the lessee. I am a lessor, so I have a guarantee which is given by the lessee, or I have a third party, some other person who has also given the guarantee, that is guaranteed by a third party, guaranteed residual value. Which amount should be chosen? Upar wala, niche wala, of course whichever is higher, I will choose that. That is MLP. Now, look here. What, this is MLP. What I have to do with this MLP? I will discount it. Once I discount it, what I will get is present value of MLP. And this present value of MLP should be at least 90% of the fair value. This present value of MLP should be 90% of fair value. Then and then we can say it is nothing but a finance lease. Moving on to the last. The asset is of such a nature that it can be used only by the lessee with some modifications. No. It means it is a tailor-made asset. The asset has been made exclusively by the lessee, exclusively by the lessor to take care of the needs of the lessee. The lessee requires a particular asset which has been made by the lessor. Means no one else can use it except for lessee. The asset is of such a nature that it can be used only by the lessee with some modification, some kind of changes that lessee may do. It is a specialized asset. It is a tailor-made asset. Lessee has got a tailor-made asset which suits his requirement, customized asset. Then it is a finance lease. So basically 5 things for finance lease. These are the 5 things for finance lease. if out of these 5 indicators any one indicator is satisfied, then it is finance lease. Any one indicator is satisfied, maybe indicator number 1 or indicator number 2 or indicator, any one indicator is satisfied, then it is a finance lease. Now if it is a finance lease, then how the accounting should be done? That is nothing but our point number 3. Yeah, accounting for finance lease in books of lessee. What is lessee supposed to do? Something similar to what you did in hire purchase. The same stuff is there. What is lessee supposed to do? 3 things. Lessee is supposed to recognize fixed asset and a lease liability at present value of MLP or fair value, whichever is lower. So lessee has to pass an entry fixed asset account debit to lessor. This fixed asset account debit to lessor, this entry is to be passed at what value? This entry is to be passed at present value of MLP. Now when I say present value of MLP, whose MLP am I talking about? Of course lessee's MLP. And lessee MLP is nothing but this. Look here, this is lessee's MLP. Lease rental plus guaranteed residual value by or on behalf of lessee. This is MLP of the lessee. So the standard says recognize fixed asset. So fixed asset account debit to a lease liability at present value of MLP or fair value, whichever is lower. Second, recognize finance charges. Finance charges over the term of lease in such a manner that it reflects constant rate. Now why did I get finance charges? See, if you look properly, the liability is getting recognized at present value of MLP. Point number 1. You are recognizing the liability at present value of MLP. But when you pay, you are not paying present value of MLP, you are going to pay the MLP. So if MLP is 500, you will recognize the liability at, say, for example, 350. So when you pay 500, there is a difference, that is 150. That 150 is nothing but finance charges. This finance charges are to be recognized over the lease term, not equally, but in such a manner that a constant rate, interest rate is reflected. And the last, recognize depreciation. Shocking, na? Depreciation. So this asset is not mine asset, of course we know. But we always look at the substance rather than legal form. We always look at the substance rather than legal form. And because we are looking at the substance rather than legal form, we will say the asset benefit will be there with the lessee. The asset is shown in the books of the lessee. So what we will do, the lessee is but obvious going to recognize depreciation based on AS 10. This is what we have to do in the books of lessee. 3 things: asset and liability, finance charges, and depreciation. 3 things are to be done, out of which 2 things will be repetitive. Every year finance charges, depreciation, finance charges, depreciation. Of course, whenever you make MLP payments, you will be recognizing the finance charges, interest, or uske baad payment. Coming on to the next area, accounting for finance lease in books of lessor. Standard says recognize lease receivable at net investment. Recognize lease receivable at net investment. Second, recognize finance income to reflect constant rate of return. Only two things. As far as lessor, the person who is giving it on lease is concerned, you have to do only two things. First, recognize lease receivable at net investment and recognize finance income. Finance income, but obvious, I have given you an asset. You're making me payments over a period of time. So the value of the asset and the payments received will obviously differ. This difference is nothing but my finance income, but that should not be constant amount. It should be constant rate of return. Of course, what is net investment? It is gross investment minus unearned finance income. Or I can say net investment is nothing but present value of gross investment. Present value of gross investment is nothing but our net investment. What is gross investment? So gross investment is nothing but MLP from standpoint of lessor plus UGRV. That is nothing but unguaranteed residual value. So you add GRV, guaranteed residual value, just add U, that is unguaranteed residual value. So gross investment is nothing but MLP from the standpoint of lessor. Lessor, kindly pardon on that. So what was MLP from the standpoint of lessor? Just look here, we were there. This MLP from the standpoint of lessor. Lease rentals plus GRV on or behalf of lessee or GRV by third party, whichever is higher. Okay. So accounting for finance lease in the books of lessor. Recognize lease receivable at net investment. What is net investment? Present value of gross investment. Or I can say net investment in another way is nothing but equal to fair value. Fair value of the asset is nothing but our net investment. Yeah. Present value of gross investment, or you can say gross investment minus unearned finance income. Now what is unearned finance income? Nothing but difference between gross investment and net investment. I'll just write down. Sorry. Gross investment and net investment is considered. Difference between gross investment and net investment is nothing but unearned finance income. Clear? Now we move to the next part of our accounting for finance lease. Lessor, 3 things. As a lessor, 2 things. Lessee, 3 things. So 3 points were there, 2 points are there. Accounting for operating lease for lessor and lessee. Accounting for operating lease in books of lessee, the person who has taken the asset on lease, lessee. Only one thing, because you are not having risk and reward. So recognize lease rental expense on straight line basis unless another method is more appropriate. Recognize lease rental expense on straight line basis unless another method is more appropriate. Now I'll go for the next area. Accounting for, okay, I may give you an example here. Accounting for operating lease in books of lessee. Recognize lease rental expense on straight line basis. Like first year I'm paying 5,000. Next year I'm paying 6,000. Uska next year I'm paying say again 6,000. Something like that. Or 7,000, let's say. So first year I pay 5,000. Second year I pay 6,000. Third year I pay say 7,000. So the total amount of what I pay is nothing but 5 plus 6, 11, 11 plus 7, 18,000 divided by 3. I should recognize expense of 6,000 every year. And this coincidence, both of them are 6. I should recognize expense of 6,000 every year on straight line basis. Accounting for operating lease in the books of lessor. Yeah. Now what is lessor supposed to do? Standard says recognize. Of course for you it is expense. So for me it is income. Unless another method is more appropriate, recognize lease rental income on straight line basis. Same way, what you are recognizing as expense on straight line basis, I'm going to recognize this as an income on straight line basis. The next, recognize depreciation. Why? Because in finance lease, the asset was disclosed in the books of lessee. In operating lease, the lessee is not showing the asset. So asset is there in the books of lessor. So is going to recognize depreciation. Recognize depreciation. So two things will happen for lessor: lease rental income and depreciation. Moving on to the next part. Sale and lease back. Now what is a sale and lease back? I'm having an asset. I'm holder of a fixed asset. What I do is I sell off that asset to somebody. And the person to whom I sold, from the same person, the same or a similar asset is again taken on lease. This is nothing but sale and lease back. So basically there are two transactions. First there is sale and then there is lease back. I repeat again. I'm having an asset. I sell off that asset to that person, one person, Mr. X. And from Mr. X, again I take that asset. I'm not buying, I take that asset on lease. That is referred as sale and lease back. So there are two transactions happening. First is sale transaction, other is lease back transaction. Now this sale and lease back, how it is to be accounted for the person who is seller, not for the person who has bought the asset, for the seller. I have sold the asset and then I'm again taking it on lease. So what can happen? It results in finance lease or results in operating lease. So I sold the asset, so there is sale, the person gives me consideration. Then I again take the asset on lease, and that lease is a finance lease. It means the risk and rewards are still there with me. Before I sold, the risk and rewards were with me. After selling, again leasing it in a finance lease, then risk and rewards are with me. It means the standard says something is not correct. Standard says actually this is not a sale transaction, but it is a finance transaction. You are in need of money and you have used your asset as security. So substance wise, there is no sales, but there is only financing which is happening. It is only financing which is happening. And if only financing is happening, we need to recognize the finance part. So whatever profit or loss which you have made, this profit and loss should not be recognized but should be amortized. So what is the requirement of the standard? It says profit or loss on sale should not be recognized immediately but should be deferred over the lease term in proportion of depreciation. Samjho, the cost price of my asset was 50 lakhs. I sold to you at 60 lakhs. So my profit is 10 lakhs. Standard से ये profit को books में लिखने का नहीं. थोड़ा amount. Out of the 10 lakhs, every year some amount. Means this 10 lakhs will be credited to a deferred income account. And this 10 lakhs will be recognized over a period of time in installments. In which installment? Divided equally? No. In the proportion of depreciation. You'll say from where will depreciation come? Of course, the moment you go for lease back, don't you think finance lease hai? If it is a finance lease, then what is going to happen? You are going to recognize asset and liability, finance charges, and the third area, recognize depreciation. That depreciation ratio. The second, if it results in operating lease, then it is genuine transaction because the risk and rewards have been transferred. I sold the asset and I took again this asset on a lease, which is operating lease. Means the risk and rewards have been transferred to the person to whom the asset has been sold. Then, what does the standard say? It says, profit sorry. The standard says, profit or loss on sale should be recognized subject to some conditions. Subject to some conditions, this profit and loss should be recognized. Now, what are the conditions? It says the first, difference between the carrying amount of asset and fair value of asset should be recognized immediately. Difference between the carrying amount of asset and fair value of asset should be recognized immediately. Whatever is the difference should be recognized immediately. No issues in that. Difference between the carrying amount of asset and fair value. Carrying amount means normally हमारा WDV. मेरा बुक्स में जो WDV है वो और fair value market price उसको recognize कर ही देने का. Second, difference between the fair value and selling price is to be accounted as under. difference between fair value and selling price is to be accounted as under if selling price is more than fair value, profit is deferred. If selling price is less than fair value, very very important, loss is deferred only if future lease rentals are reduced. I'll explain it. Just have an idea of it. I'll speak up some amounts so you'll get an idea. Sale and lease back two times. It is a finance lease or it is an operating lease. If it is finance lease, sale and lease back is a finance lease. और sale उसके बाद lease होता है. That lease is a finance lease. Then profit or loss is always to be deferred in the proportion of depreciation. अर्थ आया? Second, sale and subsequent lease back is an operating lease. Then the standard says profit or loss on sale should be recognized subject to condition. Now first condition, the difference between WDV and fair value या तो positive भी हो सकता, negative भी हो सकती. Whatever it may be, the difference is either positive or negative, always recognize fair value and the WDV carrying amount. Then the next, fair value और selling price का difference. अगर selling price is more than fair value, तो profit है, defer करो. But if selling price is less than fair value, then the loss is to be deferred only if future में मेरा lease rental का expense will be reduced. Future, if lease rentals are reduced, means what? मेरा WDV is 50, fair value 60, तो this 10 covers here, इधर आ जाता है. This 10 is covered here. Always recognize. But my selling price, I can have two options. चलो पहला option, my selling price is 65 or my selling price is 58. तो 60 और 65 का जो डिफरेंस है वो हमेशा डेफर करने का. पहला 50 और 60 का हमेशा रिकॉग्नाइज, WDV और फेयर वैल्यू का डिफरेंस रिकॉग्नाइज. 60 and 65 difference, 60 and 65 का difference, what is to be done for 60 and 65 का difference? Here, it is always to be deferred. I'm sorry. This is not this. I'm sorry. This 10 is here. $60 or 65, that is nothing but ये वाला 10. I'll do it again. Say the WDV is 50, fair value is 60, selling price is 65. तो ये 50 और 60 का डिफरेंस 10 रुपया, ये पॉइंट नंबर 1 कवर करता है. डिफरेंस बिटवीन कैरिंग हमेशा रिकॉग्नाइज कर देगा. फिर डिफरेंस बिटवीन फेयर वैल्यू एंड सेलिंग प्राइस, दैट इज selling price is more than fair value. Look properly, selling price is more than fair value. तो ये जो 5 रुपया है इसको क्या करने का? Defer. I proceed further. WDV 50, fair value 60, selling price 58. This 50 and 60 is nothing but this wala profit only, upar wala, same. But this 2 rupees ka jo loss hai, this 2 rupees is covered here. This 2 rupees ka loss recognize if future lease rentals are not discounted. Matlab in future the rents which I am going to pay, agar wo market rent hai, so then recognize it. If it is less than market rent, then and then only it should be deferred. Loss is deferred. This 2 rupees is loss. 60 item I am selling at 58. 2 rupees is my loss. Is to be deferred. Only future lease rentals are reduced. Only future lease rentals are reduced, then only we will defer the loss. So this is the end of our theory part of AS 19. We will now go further for problems along with solutions. The first, write a short note on sale and leaseback transaction as per accounting standard number 19. So what is a sale and leaseback? A sale and leaseback is a transaction where there are two transactions, a sale transaction and a leaseback transaction. We are selling the asset, and the person to whom we are selling the asset from the same person, the same or a similar kind of asset is again taken back on lease. That lease can be a finance lease or operating lease. Okay, so this is the solution. Of course, we have already discussed the accounting treatment. They have just asked what is sale and leaseback. If you want, you can also specify the accounting treatment for sale and leaseback. Next question. Explain the types of lease as per AS 19. So as per AS 19, how many leases are there? 2 leases, operating and finance. What is operating lease other than finance lease? What is finance lease? Don't say other than operating. What is finance lease? A lease which substantially transfers risk and reward incidental to the ownership of the asset is referred as finance lease. You may just go to the solution. Classify lease in two categories, and then we also have the point that how to identify whether a lease is a finance lease or an operating lease. So can I say I can classify the lease as a finance lease or operating lease based on 5 indicators. At the end, the ownership will be transferred, you have a right to buy the asset, or the third part I can say that it covers majority of the economic life, the present value of MLP substantially covers the fair value, and the asset is of such a nature that only can be used by the lessee with some modifications. So this is the solution to it. We go to the next question then. Annual lease rental 40,000 at the end of each year. Lease period 5 years. GRV, guaranteed residual value 14,000. Fair value at the inception of the lease 1,50,000. The IRR is 12.6%. The present value factor is 0.89, 0.79, 0.7, 0.622, 0.552 at the end of first, second, third, fourth, and fifth year respectively. Show the journal entry to record the asset taken on finance lease in the books of lessee. In the books of lessee, what is the journal entry? If you remember, we learned this point in the books of lessee. Here it is. Recognize fixed asset and lease liability at present value of MLP or fair value, whichever is lower. So first of all, in this case, you have annual lease rentals. How much? 40,000. So 40,000 every year. 40,000 multiplied by 0.89, 0.79, 0.7, 0.62, and 0.552. First year, second year, third year, and fourth year. And fifth, and fifth year. Yeah. Then the GRV is 14,000 will be multiplied by 0.552. So what we will get is nothing but present value of MLP or fair value, whichever is lower. So this is how the solution you will find out here. 40,000 into this. So I got 1,49,888. So 1,49,888. 1,49,888 is nothing but present value of MLP. And what is my fair value? My fair value is 1,50,000. In the books of lessee, it is to be recognized at whichever is lower. So we'll recognize at 1,49,000. So our entry is asset account debit to lessor. This is in the books of lessee. Question number 15. B and P availed a lease from N and L Limited. The condition of the lease term are as under. Lease period 3 years in the beginning of the year 2010 for equipment costing rupees 10 lakh. Expected useful life 5 years. Fair market value also 10 lakhs. Property reverts back to the lessor. The UGRV, unguaranteed residual value, UGRV, is estimated to be 1 lakh at the end of the year 2012. Okay. 3 equal annual payments are made at the end of the each year. IRR 10%. The present value of one due at the end of third year is 0.7513. The present value of annuity third year is 2.4868. State whether the lease constitutes of finance lease and calculate unearned finance income. I'll just explain you through simple rough work. Now see. First of all, we know year 1, 2, 3, 3. You'll say why 3? Because here lease rentals, and here UGRV is given. This is done from the standpoint of lessor. Then of course the inflows which the person is going to get, this is not known, this is not known, this is not known. UGRV is known. UGRV was nothing but 1 lakh. Can I say this total is nothing but gross investment? Whatever it is, of course today it is question mark, but it is gross investment, because what was gross investment? Gross investment is nothing but the MLP from the standpoint of lessor plus unguaranteed residual value. That is nothing but our gross investment. Then we have a discounting factor, say at the rate of 10%, whatsoever it may be, 0.9090, 0.8264, 0.7512, of course here also 0.7512, and then what we get is nothing but present value. As far as this is concerned, this much is concerned, can I say this total will be nothing but present value of MLP, and this is nothing but present value of UGRV, and this gross investment, when it is discounted, what I get here is nothing but net investment. There is nothing but net investment. The information is given in such a way that we can apply this information here. This net investment is nothing but equal to the fair value always. Net investment is nothing but equal to fair value. Now if my net investment is equal to fair value, simple, my fair value is 10 lakhs. If my fair value is 10 lakhs, I can write down this 10 lakhs here. I can find out this amount, that is say 75. What was the discounting factor? 7513. 7.7513. So can I say it is nothing but 75,130 is here. So from 10 lakhs, I deduct 75,130. So I'm left out with this total is nothing but 9,24,870. 10 lakhs, from that I'm deducting this 75,130, 9,24,870. So can I say 9,24,870 is nothing but my present value of MLP. Now if this is more than 10 lakhs, or it substantially covers, it is 90%. If you remember point number 4, the present value of MLP substantially covers fair value of the asset. If it is 90%, then we say 90% or more, then we say it is a finance lease. So can I say it is more than 90% only? 92.48%, so it is a finance lease. No, they're asking us what is gross what is your unearned finance income? Can I say difference between gross investment and net investment is unearned finance income? Difference between gross investment and net investment is my unearned finance income. I have to find out gross investment. Very much simple. This is constant. This is constant. So can I say I can use annuity factor, that is nothing but summation of my discounting factor. So 9,24,870 divided by the annuity factor. The annuity factor, it's given in the question. Always use whatever is given in the question. Don't find out on your own. 2.4868. 2.4868. So 924,870 divided by 2.4868 gives me somewhere around 37,000. I'm sorry, 3,71,911.69. Or I can say that is nothing but 3,71,912. This is nothing but my 1 MLP. Year 1, 371,912. Year 2, 371,912. Year 3, 371,912. So can I say what will be my gross investment? The gross investment will be nothing but 371,912 into 3 plus 1 lakh. Which gives me 12,15,736. 38. Oh, 6. I'm sorry, that should be 6. 736. This is my gross investment. Net investment is 10 lakhs. So can I say 2,15,736 is nothing but my 2,15,736 is nothing but my unearned finance income. Now this is just a rough way to give you an idea with respect to all these things. It should be done in a better presentation. This presentation is here. We are given the solution here. Yeah. See, the cost of the equipment 10 lakhs. UGRV 1 lakh. Present value of UGRV 75,130. This is what I did it here also. 75,130. 75,130. So what I'm left out with 924,870. 924,870. So the present value of NET is 2.48. So 924,870 divided by 2.4868, you get 37,19,000. Oh, some error is there in this dots. So 924,870 divided by 2.4868. This gives you 3,71,911.70. Here it is point. Kindly see. 3,71,911.70 into 3. So 920 present value of 920 equals 92.48 of the market value, that is 10 lakhs. Hence it is a finance lease. And then they have found out unearned finance income. So how did they find out unearned finance income? 371,911.70. This is one lease rental into 3. That is 11,15,735 plus this. You got something. Just commas are wrong. Please rectify. 12,15,735. 12,15,735. This is what we got also. 12,15,736. Just because we rounded off to the next decimal. 10 lakhs is nothing but my net investment. So UFI, not UFI, it's UFINI. Unearned finance income 215,736, 250,736. Clear? Yeah. We move to the next question. These are very important questions which have been there in exams at every point of time. Same repetitive question. JCB machine having WDV of 50 lakhs to Y for 60 lakhs and the same JCB was leased back to Y. The lease is operating lease. Okay, comment. Now if you remember what we have to do. First, difference between the difference between the WDV and the fair value, recognize profit or loss. Second, difference between the fair value and selling price. If selling price is more than fair value, deferred. Selling price is less than fair value, loss is to be deferred only if future lease rentals are discounted. I'll just do it here. The case, WDV, fair value, selling price, what is our treatment? Case 1. WDV is 50 lakhs. Sale price is 60 lakhs equal to fair value. WDV 50 lakhs. Fair value 60 lakhs. Selling price 60 lakhs. First I will compare this two and then I will compare this two. So 50, 60. So can I say recognize profit of 10. First area. Second, no need. Why no need? Because these both are same. Second case, WDV is 50. Fair value is 50 and sale price is 45. Fair value is 50, sale price is 45. Fair value is 50. This is 45. So first, nothing because there is no difference. This loss is there. Recognize loss of 5 lakhs. दूसरा option or defer loss of 5 lakhs if future lease rentals are reduced. Third option. This is still 50. Fair value 55, selling price 62. Fair value 55, selling price 62. Okay, first this difference, of course, कोई tension नहीं. Recognize profit of 5 lakhs. दूसरा, this and this. Selling price is more than fair value. So defer profit of 7 lakhs. Here there is no or option. Here only it is or. Only in loss we have or. Fourth, this is 50. 45 is fair value. Selling price is 48. Recognize loss of 5. Defer this difference. This is loss. Defer profit of 3. Yeah, so we completed all the 4 points together here. This is the solution for it. Those things have been already covered by me. You may just go through both of them. Classify the following into either operating lease or finance lease. You just lessee has an option to purchase the asset at lower than fair value. Whether finance lease? Yes, it is a finance lease. Economic life of the asset is 7 years. Lease term is 6 years. So can I say 6 by 7 is obviously more than 75%? Yes, this is a finance lease. Economic life of the asset is 6 years. Lease term is 2 years. Okay. But the asset is of special nature and can be procured only by the lessee. Again, this is also finance lease. Present value of MLP is X. Fair value of the asset is Y. So X divided by Y into 100 is 90% or more, then it is finance lease. If it is less, then it is nothing but operating lease. Yeah. So we end our accounting standard number 19.